Welcome back to you, pumpkin pie. Vanny Boo here has a question for us. Vanny Boo has asked me, would it be cool to talk about Hart's Law between Pulse and the PulseX sell-off? It seems as if people are rinsing out of Pulse. PulseX dips because of liquidity bonding. Did people really get rinsed? Or was it the bonding, and do people have something to sell off? Very good question, my darling. I have something for you. And I'm going to simplify it here for you. And I will be doing many videos like this, friends, because this does take time and delicate dedication to answer these questions. And you got to understand them, but it's all about the ratios. It takes a bit of time to kind of understand what's going on and to see the picture. But what I have for you is PulseX to Pulse ratio. If you're new here, you click on PulseChain, you find PulseX to Pulse. You have to click on the button up here. It'll say switch to WPLS. You want to switch to that. That'll give you the pricing. You don't want to look at the USD pricing. If you've noticed here, right now, it's 0.345 around there, which means PulseX is about 39% of the price of Pulse. When it was up here, it's 0.50. That means PulseX is 50% the price of Pulse. And up here would be all the way parity. I even have some all the way parity would be at the very, very, very top. And probably, who knows if we'll ever see something up like this. This would be like an extreme valuation if we ever got there. We've never in crypto seen something like a DEX do something huge to a layer one. The market seems to price layer one chains like a city today, and the DEXs are like a business within the city. But for the most part, we've never seen a business be bigger than the city itself, if you get what I mean. So we haven't seen a DEX do that. Perhaps one day in the future it'll be possible. But you do think if it ever got to a point where a DEX is huge like this, there's probably within the economy, so this is the DEX, there might be little passageways around the DEX and applications will be built around it to enhance the DEX itself and to allow money to slosh around. And if that happens, that means more projects exist around, which also means the layer one chain, which hosts all of these, will probably have more value. But this is not a guarantee. It's probably likely one day we'll see a giant application come that flips some sort of layer one. I don't even know if it's really possible if you think about it. Sometimes they say it's got something to do with security, but this might be an idea as to where the limits of PulseX are. But what I have for you now is a 12-hour chart. This ratio, I believe, is some sort of risk on, risk off type of metric. It's not perfect, but it's something that we can use. So right now we're hovering here. I have these rectangles, all right? These rectangles, it's where we started, okay? We can write down here, this might be a buy PLSX zone, right? And if you're wondering why PulseX, well, remember, when you do these, friends, when you do these ratios, so PulseX, this is what we're looking at. So right now, we're looking at this ratio. You see this part? This ratio right here. This is what we're actually looking at, PulseX to Pulse. Always look at the numerator, the one on top. That is the direction. If the chart goes up, this is bullish. The top one's bullish. If the chart goes down, it's bearish. It's very simple. It's just like the ETH BTC chart. Do you remember a little chart called the ETH BTC chart? We know this. When this goes up, Ethereum is winning. When this goes down, Ethereum's getting crushed. This is how we're supposed to look at it. This is the best way to interpret it. So when we look at PulseX and Pulse, from the launch, we had a very bullish sentiment, and you can see some big hands pushed it up here. It went to about 50%, and then it stopped. And now we are hovering around this middle line. It's possible in the future we're going to deviate. Look, I'll tell you right now, we most likely are going to deviate, but deviate to where? This is where it's really important. See, we're at this middle line now. We're right at this middle line. So we don't know where the future is going to take us. I'm going to write now for you the top rectangle. So you know this is the buy PulseX zone. It's possible that, obviously say it's possible. It can always break these zones. This is the sell PulseX zone. We now have some sort of range of value. This is just complete guessing, okay? I just don't get locked into these because I promise you right now, I'm just teaching you because I got to show you this. I can tell you over 1,000 times I've seen this happen. Wee! and everyone gets wrecked. And also, I've seen this happen. Everybody thinks they're winning. No, it goes down lower than you can possibly imagine as well. That's what happens in these. Every single time you stretch it out, 1, 2, 3 years, you're going to find something like this. So when you're looking at this, where is our value zone and where are we? We're in the middle. There's nothing to do. But what this tells me is, a lot of people ask me, if you had to pick one coin, Pulse or PulseX, or what would you do? Well, because it's in this zone, this is how I actually give my answers here. Because we are in the middle zone of friendship right here, because we're in the middle and we don't know which one is super cheap or expensive, personally, let's say someone said, oh, I've got 10,000 put in, I would just put in 5,000 in each, 50-50, 5,000 in each. I've noticed there's a psychological weakness people have. When you say that, people then misinterpret in their mind. They think they're diluting away their punch, but you're not. What you're doing is you're protecting yourself. You're actually making more money in the future if this works out. Let me explain why. Because if you have $5,000 and you put in, so if you had 10,000 and you put in half and half into PulseX and Pulse, and you're looking at this zone, you now protect yourself from where the spread goes in the future. Because what if, let's say, okay, we don't know what's going to happen in the future, right? But what if PulseX is really weak? What if there's a big Pulse rally? So if Pulse rallies, goes super strong, then this red ratio is going to go down. What if we come back down here? What if we go all the way down there? Now, you will be thanking yourself. You'll be patting yourself on the back, on your very straight postured back, sitting on your squeaky chair. You'll be saying, oh, wow, I'm glad I went half and half, because now this is where it gets juicy. Now we're down in this zone. You have the option to rotate some of your Pulse and use it to spend into PulseX. That's the beautiful part about it. You can even do the quick numbers here. I've got the chart up here for you. So if you had, like, let's say you did 5,000 in each, for example, right? 5,000 will get you about 50 million Pulse, and then 5,000 will get you about, it'd be 50 million Pulse, and so 125 million PulseX. So you can actually write that down. So here you would own 50 million Pulse, 125 million PulseX. That's the beautiful part, right? When you're looking at this zone, the beautiful part is, let's say you bought in today. See this middle part? You bought in today. If the spread collapses down here, you have 50 million Pulse to deploy. So you could, obviously I would never recommend going all in on anything at all times, but down here, you might say, hey, I have 50 million Pulse here. Can I spend 20 million of it all the way down here? Yes, you can. So what you would then do is probably rotate it. Now you can have 30 million Pulse, and then whatever the number is plus the extra, because you've converted it, right? You get even more PulseX here. And then obviously you would be hoping that eventually over time it comes back to the middle. Wouldn't that be great? And then you just make your ratio 50-50 again. Or you just leave it. Doesn't really matter. You might just be bullish on PulseX. Okay? But see how you protected yourself here? If you went all in on one or the other, you get destroyed. What about the other scenario? Okay, so if you had the other scenario, what if out of nowhere PulseX just screams up higher? Well, aren't you glad you had PulseX here? Because then up here, you can just do the inverse. Up the top, you will then be able to spend your PulseX to get more Pulse. This is what you can do. So up here, you might have like 75 million PulseX to spend, and then you have the extra PLS. Or that's all you've done. You have just been able to take advantage of a spread blowout. That's what you've done. Now, what do I think is probably going to happen? This is just me. By the way, I don't like to get locked into these because you never know what can happen. You got to be ready for anything. Okay, you got to be ready for anything and everything. But if I was to guess, right? If I was to just take a guess, I feel like we're in the range zone. This is just my gut feeling tells me that we're going to be in this is the zone. This is our oscillator, right? We go from, see this 0.25. This is where you see people on Twitter, they'll quote 4 to 1. Don't use these 4 to 1, 1 to 2.5. They get too confusing, man. Just quote this ratio. PulseX to Pulse. Just quote this ratio. We quote ETH BTC. You know, when we quote ETH BTC, no one says, so right now, one Bitcoin buys you 15.32 Ethereum. We don't say, 15.32, and then it goes, up to 11.2, and then back down to like 16.25. We don't do these numbers, right? Just do ETH BTC. How big are you relative to the Big Daddy? That's it. 6.5%. Okay, so we go back here. How big are you relative to the Big Daddy? Right now, you're about 40%. So what will the value zone be? 30%, 25%, and lower. And what will the expensive zone be? 45%, 50%, and higher. So this is the best way to think about it. This is how I'll simplify it for you. So what's happened? What did we actually see? Well, remember I had this theory before even PulseChain launched. I speculated with my little peanut brain that this would be a risk-on type of asset ratio. And it was. We went risk-on, and look, we've started to taper off. But the liquidity bonding is so thick, we didn't return all the way back to the bottom. So you would kind of think with such a vicious sell-off in the PulseChain ecosystem would be much lower, but I guess the liquidity bonding helped. And we've got the same types of players in there. So now at least you're prepared. This is why I say it's important. You got to be prepared for both ways. You don't want to be caught offside. Let me ask you this. Do you really want to be hating if PulseX goes up here? Also, do you really want to be hating if PulseX goes weaker here because of a pulse rally? You don't want to be feeling that at all. This is why I believe smooth yourself out, sit in the yield farms. The yield farms are there to protect. That's why you can participate in these yield farms. Yeah, the yield isn't the best. All right, the yield isn't the best. It's 28%. But hey, it might get better in the future. Maybe there's V2. Maybe it gets migrated to V2. We don't know. Probably won't. Probably just sits here. But just take advantage of this yield while you can. This is PulseX to Pulse. If you see this 28% yield, it's not that much to compensate for the loss of impermanent loss. Because look, I know people they moved their portfolios down here. So right now they have an impermanent loss of 30%. So they have lost 30% of their coins. And here's the thing, right? They've lost 30% of their coins. They're only earning 28% in a year. In 1 year. So basically, they have to just sit for 12 months. The whole time, everybody who's done this has to sit for literally 12 months earning all the yield, and you kind of hope that the spread kind of comes back down, all right? So these are the metrics that we're dealing with, and I think it's pretty stable so far. I think the market understands it. I think it's great. If you even have a look, I can even show you the PulseChain volume has dropped off huge. Look at that PulseChain 24-hour volume. I know we're just coming off the back of a weekend, but 24 million. We were doing 300 million when we launched. But of course, there's been just a total decimation wipeout. There's been the sell the news, everything got destroyed, we got crushed. Look at this. We even lost the rank to ZK Sync. But that's okay. These are just the start. It's just, we already saw the potential. The potential for this to come out of nowhere and do this was fantastic. And no one's paying attention. That's a great thing. So even with this volume, so this is how I look at it. Even with such shockingly low volume, we are still in the middle. That to me kind of tells us that we're doing pretty good. This ratio is good. The market understands it. We don't have enormously weak hands exiting out of PulseX. People understand the value proposition. And that's exactly what we want to see at the end of the day. So as a friendly reminder, if you're out there, you want to DCA in, look at the advantage. We're right in between. I would get 50-50. Don't think about one or the other. It's literally 50-50. We're right in the middle, okay? So you protect yourself. If it goes up, you got something to deploy. If it goes down, you got something to deploy. And you know what? You didn't even have to deploy, by the way. You might just be DCAing for the next 12 months. And if we go down here, you at least know, okay, I'm just going to accumulate PulseX, right? Or when it was up here, you're just going to accumulate Pulse. That's how you can use it to your advantage. And hopefully, we're going to go through this period with a nice, stable oscillation just to bring more certainty, more value to the whole ecosystem. Because the last thing people want to see when they come in, honestly, the last thing they want to see is the DEX value doing these shockingly huge volatile stuff. A nice, stable DEX is exactly the thing that new people want to see. But you won't be able to tell that yet until they all come when the floodgates open. Tell mum and dad that you love them. Like, subscribe, press the belly button and all. I'll catch you in the next one.